How small apartment investors can analyze comparable sales data and calculate GRM for valuation. Gather recent comparable sales data. Identify relevant comps by looking for properties within the same neighborhood or a similar location, ideally with the same unit count, layout, and amenities. Ensure comps have sold within the past 6 to 12 months to reflect current market conditions. Apply the comparable sales method. Adjust for differences if comps differ slightly in size, age, or features. For example, a property with newer renovations may warrant a higher valuation than one needing updates. Calculate the Gross Rent Multiplier, or GRM. First, determine the gross rental income. Identify the gross annual rental income of the subject property, including rent from all units and any other income sources, such as parking and laundry. Estimate property value using the GRM. Multiply the gross income by the average GRM. To determine the subject property's estimated value, multiply its gross rental income by the average GRM derived from comparable properties. Here are some additional tips for using the market approach. Use recent data. The more recent the sales data, the better the reflection of current market conditions. In summary, the market approach, including the comparable sales method and gross rent multiplier, provides small apartment investors with practical tools to estimate property value based on recent market trends and rental income. By analyzing comparable sales data, calculating price per unit, and using the GRM, investors can confidently assess market value, supporting informed decisions in property acquisition and management. These methods offer straightforward yet powerful insights into a property's current worth, making them essential tools for successful apartment investing.